Good morning, committee. I call this meeting of the Standing Senate Committee on Banking, Trade, and Commerce to order. Today we resume our special study on digital currency, including the potential risks, threats, and advantages of these electronic forms of exchange. Still in the early or learning stages of our study, the committee has received presentations from government departments and agencies such as the Department of Finance and the Bank of Canada. We have heard testimony from academics in the fields of economic and monetary history and in cryptography. The committee also heard from the Bitcoin Strategy Group, the Bitcoin Exchange CA Vertex, and BitAccess, the makers of the Bitcoin ATM, who gave a live demonstration and purchase of some Bitcoin using the ATM here at the committee. Now, as chair, I want to give full disclosure. As you know, at that committee, for the first time on television, I purchased for $100 a Bitcoin, and at that date, which was April the 9th, it was purchased at 0.18 Bitcoin for $100. And I am pleased to advise you that today, according to CA Vertex, at 9:35 a.m., that is now worth $124.56, an unrealized gain of $24.56. Now, you realize the importance of disclosing this because as we continue our hearings today, we are welcoming two witnesses from the Canada Revenue Agency. Not only have I voluntarily given it, I've emphasized that it's unrealized. But it really is a pleasure to have you here, which I'm not sure everyone always says about having Revenue Canada coming to visit them, but it is a great pleasure to have you here, and we appreciate the input that you'll be able to bring to our study. Pleasure to introduce Eliza Erskine, Director, Business and Employment Division, and Michael Cook, Manager, Business Income and Capital Transactions Section, Business and Employment Division. It is a pleasure to turn the floor over to you, Ms. Erskine, for your opening comments.
Thank you, Mr. Chair and committee members. We appreciate this opportunity to contribute to these proceedings about the regulatory and policy issues surrounding digital currency. You have asked us to describe how the Canada Revenue Agency views digital currency. Tout d'abord, j'aimerais vous mentionner.
I would like to explain upfront that my colleague and I work in the technical and policy area of the CRA. Well, my overview this morning will touch on the goods and services tax and, very briefly, on compliance matters. The CRA is still reviewing issues in these areas, so the information we have to share with you will be rather limited. As previous witnesses have noted, the research in this area is still a work in progress.
Most of the questions received by the CRA from the media and from taxpayers have related to income tax issues, although requests for information have now increased in the GST area and include internal referrals from audit. Over the past year, there have been several inquiries from the media about the CRA's views on digital currency and how it is taxed. Almost all of these inquiries have asked about Bitcoin, which, as you have heard from others, is currently the best known of the convertible, decentralized digital currencies. As you have discussed with other presenters at these proceedings, these digital currencies can be converted directly to fiat currencies, such as Canadian dollars, and are generally considered the ones of most interest to regulators, as they are the most similar to fiat currencies. The first questions received by the CRA in the spring and summer of 2013 asked about things like, will the CRA treat Bitcoin like foreign currency? Or, are transactions with Bitcoin taxable? In response to these inquiries, the CRA put basic income tax information about digital currency on its website in November 2013. A copy of this fact sheet has been provided to the clerk for your information. I'll now take you through what the CRA has said about digital currency. The CRA does not view, nor does it treat digital currency as a currency. Instead, the CRA views digital currency as a commodity. That is, a thing that can be bought and sold and traded for other things. As you've heard, while digital currency may one day be a currency, it isn't there yet. So, is digital currency taxable? How and when? There are two main uses of digital currency that bring in tax implications. First, digital currency can be used to buy goods and services. Because the CRA doesn't view digital currency as money, these transactions are treated like barter transactions. But instead of trading 2 chickens for a bicycle, you are trading 2 bitcoins for a bicycle. Or you could offer somebody half a bitcoin to repair your shoes. These are all barter transactions. Are barter transactions taxable in Canada? Canada's income tax system taxes income from a source, usually a business or property or employment. So if you are in the business of selling bicycles, then the 2 bitcoins you received represent business income to you, and the value of the bitcoins in Canadian dollars is included in your business income for the year. There are no special tax forms for barter transactions. The regular tax forms for individuals and businesses apply. In this bicycle example, GST could also apply. if sales tax does apply, which would usually be the case for a retailer, the value of the 2 bitcoins in Canadian dollars would determine the GST payable on the purchase of the bicycle. The second broad category of transactions involving digital currency that can lead to income tax implications is where digital currency is bought and sold as a commodity. The CRA treats buying and selling Bitcoin in the same way as buying and selling iron or copper or any other commodity. The usual tax rules apply. Very generally, first you have to decide if you are in the business of buying and selling digital currency, or whether this is strictly an investment for you. In tax terminology, is this an income transaction or a capital transaction? If this is a business for you, then your gain is business income, and it's fully taxable. If this is an investment for you, only half of your gain is included in your income and subject to tax. On the other hand, business losses are fully deductible against any income, whereas only half of your capital losses are deductible, and the deduction only applies against any capital gains. In summary, a digital currency such as Bitcoin is treated as a commodity for income tax purposes. You can trade it for goods or services, but the vendor of the goods or the supplier of the services may have taxable income, and the GST may apply. You can also trade digital currency itself, in which case you will have business income or loss, or a capital gain or loss. L'ARC a reçu d'autres questions à...
The CRA has received other questions about digital currencies and tax. For example, can I donate bitcoins to a registered charity and get a donation receipt? The answer is yes. You can donate bitcoins to a registered charity. As you would expect, the amount of the donation receipt would be equal to the value of the bitcoins donated in Canadian dollars. This concludes my opening remarks, which I hope have given you an idea of the issues the CRC has considered and is considering, especially in the area of income tax. I would be happy to answer any questions that you may have.
Thank you very much, Mr. Erskine, for your opening comments. I took a look at the fact sheet that you sent out and also related it to the sheet that the IRS had provided, and one seemed to mirror the other fairly well when it came to capital gains and retail operations. But there was one area in the Canadian fact sheet that seemed to be silent, which was talked about in the U.S., and that was if Bitcoin was used as a method of paying a salary, which raised in my mind the question as to how would that work? In other words, if I were receiving payment for services, a salary in effect of in Bitcoin as distinct from Canadian dollars, do I need to fill out a tax return? Would I be expected to receive a T4? And if so, how would you establish a value on it?
Thank you for the question, Mr. Chair.
We didn't rehearse this. I never rehearse anything with the Revenue Canada.
Well, fortunately for us, employment income is also actually within the division that we look at.
Right.
So this question has come up, although so far hypothetically. In Canadian income tax, any amount received by virtue of, in respect of employment, must be included in your employment income. The terms in the Income Tax Act for employment income are very broad, and in fact, the courts have said these are words of the broadest application. So, with a few very limited exceptions, anything that you receive in connection with your employment income is included in your employment income, and a T4 has to be issued to you for the value in Canadian dollars. And that's something that is worth emphasizing and I believe my colleagues at the Department of Finance mentioned this as well. The Income Tax Act requires most transactions to be recorded for tax purposes in Canadian dollars. So that would include things like employment income. The more challenging question, perhaps, is the one that you've asked: how do you value it? This is a question we've been asked several times over the past year, and the answer is, like so many things dealing with Bitcoin and tax, you value it like you value anything else. The value of Bitcoins. What does the value of Bitcoins derive from? To a large extent, and I know that you have canvassed this issue with other witnesses, it derives from what people agree that it is. In other words, if we were trading gold, if I was paying my employee with gold, and we said, okay, gold is currently worth $200 an ounce, and someone gave me an ounce of gold, I think we would all conclude that I should have $200 included on my T4 as employment income. Bitcoins are the same. What's interesting with comparing gold to Bitcoins is because we treat it like a commodity, we have to remember, we don't eat gold, we don't breathe gold. Gold really has value to us because we have decided it has value to us. The CRA would view a Bitcoin the same way. So what is the current value on the market that a person could reasonably establish? It's an evidentiary issue. And if a taxpayer came to us and said, well, you've told me you think that Bitcoin was worth $400, but I actually think it's worth, it was only worth $350, we would require reasonable evidence as to why they picked $350. But it's a valuation issue.
Thank you very much. I have a number of questions which I'm going to go to immediately, starting with Senator Black, to be followed by Senator Ringat.
Thank you very much, Mr. Chairman, and thank you both for being here. I found your presentation incredibly articulate and clear. So you're either a lawyer or a teacher.
I'm a lawyer, sir.
This is very encouraging. Wonderful. So am I. I knew it. Wonderful. Thank you very much. Now my question for you, please. I'm working from the premise, through my questioning with the various witnesses, that digital currencies are an innovation that we will continue to see developed through time. Or not, but let's assume that we're going to see digital currencies develop through time. And one would then expect to see expanded use of digital currencies. Do you believe that the regime that you have so articulately described today could accommodate enhanced use of digital currencies or changes as you would anticipate they might evolve?
Thank you for your question. Certainly, based on what we have seen so far, the use of digital currency such as Bitcoin is increasing, despite the fact that we have all seen terrific fluctuations, as well as, of course, some serious security concerns with theft of Bitcoin. I would anticipate, based on my experience with the Income Tax Act, that what we have developed so far, because it is fundamentally the same basis as anything else in the Canadian market, should be able to accommodate increased use of Bitcoins, increased use of digital currency. I think there are still going to be issues to explore. Mm-hmm. The Income Tax Act in 1917 was a few pages long. Mm-hmm. It's now over 2,000 pages long. Mm-hmm. There may be nuances that need to be looked at, but for the present time, I think the structure we have in place probably is sufficient because we treat it like a commodity. And I think once people, innovative though it is, because of the transaction nature of it, from an income tax, from a tax perspective, I think our structure is probably able to accommodate it at the present time.
Great. Thank you very much. Thank you, Mr. Chairman.
Thank you, Senator Black. Senator Ringat, to be followed by Senator Bellmeyer.
Thank you. This is certainly most intriguing, and I welcome your presentation. As a follow-up to Senator Gerstein's question in regards to income, You know, you need, in order to be recognized, to have a Bitcoin recognized as an income revenue, you need to have an employer that provides that transfer of the Bitcoin. In regards to revenue. But there's also all the other aspect of the employer-employee responsibility, and that is the contribution to the CPP, contribution to EI, and so forth. So what happens in regards to the employer's obligation? You know, from your perspective, okay, you look at the Bitcoin as a possible revenue from the workplace. You will look at it only once a year, per se, during income tax times and so forth. Mm-hmm. However, the contribution to CPP and EI is, you know, either on a weekly or bi-weekly or monthly transferred. Mm-hmm. So how do you handle that portion of the issue if it comes to that? How would you handle it?
Merci. CPP and EI, of course, are generally based on the value of the employment income received. From a tax point of view, and the CRA does administer that portion of the CPP-EI, this is not greatly different from what we have been dealing with for the past century in tax, which is what happens when your employer gives you goods in kind instead of currency.
So you would have to value on a weekly basis what was the corresponding amount in Canadian dollars of the required CPP and EI contribution.
That is possible. That I would suggest an analogy, and it's not completely analogous because the Income Tax Act, for example, has specific rules about what happens when employees get shares. But we have all heard of employment situations with stock options. We're all familiar with situations where someone, for example, gets room and board. While I think it is fair to say that with something like Bitcoin, with digital currency that fluctuates wildly at times, that is a much more challenging valuation issue. Mm-hmm. The fundamental issues of collection and ensuring that those amounts are in trust and safe, which is what CPP and EI has to do, those are still the same. When I said that there are nuances, when I said our system, and by that I mean our income tax, potentially our goods and sales tax, and as you've mentioned, CPP and EI, there are probably nuances that need to be looked at over time. From the fundamentals, from the basics, for us, Bitcoins is just like looking at someone being given gold, someone being given chickens. For some reason, chickens have a tendency to come up a lot in barter transactions. You've raised an excellent question on the valuation.
Yeah, but okay, Chair. For instance, you mentioned gold. We have access, everyone has access to the daily value in Canadian dollars of gold. However, we don't have, there is no, from as far as I know, public access to the value of Bitcoin in Canadian dollar yesterday. You know, your example, Chair, of the dates that you've purchased and the value today. But this is not public information. Would you see the Bank of Canada, you know, having a public site saying, well, yesterday in Canada, this is the information we got, and Bitcoin was valued at X?
Chickens also?
Chickens.
I believe it is public. It may vary by what exchange you get it, but I think you can access the value of
There's
Bitcoin.
many reference points.
There are a number
Many
of reference.
Canadian reference
Yeah.
point? Okay, so you would use that then, I guess.
There's many reference.
Yes, that would be what we would do. Coming back to my initial point, it is always up to, in this case, the employer to demonstrate that they have valued it appropriately, but to the best of my knowledge, there is publicly available information on what a Bitcoin is worth today, on any given day.
Okay.
The CRA would, of course, have to accommodate, as it has had to accommodate as an administrator, the situation of businesses, of small businesses, of employers in doing these valuations. But this is something that the CRA has had to do, as I said, for many years, with every new innovation in terms of how people are paid
To
and
assess
what
a
they
value.
want. That's right.
Okay. Chair, if you
Please.
don't mind,
No.
in your summary, you say you can trade the Bitcoin for goods and services, but the vendor of the goods or the supplier of the service may have taxable income, and the GST may apply. So that is, if I was a merchant or if I was selling something and that, I'm looking at your statement and you're saying may and may, how can it be shall? How can you define that it will be shall?
Well, that is an excellent question, and that one I will confess is one that we did expect. I'll address the GST question first. It is not my area of expertise, but very broadly, for GST to apply, the vendor, the provider of the services would be a GST registrant. My knowledge isn't up to date, but I can tell you that as of even as recent as a couple of years ago, threshold to be a GST registrant would be $30,000 of gross income. So the first point is that if you are not a GST registrant, it doesn't apply. The broader point, which applies both effectively in the GST context and definitely in the income tax context, is this income from a source? So we use the term may because if you have a business, then you will be taxable on business income. But if you do not have a business, then there is no source, in which case you are not taxable. As an example of when you would not have a source, as that term is used in the Income Tax Act, if you, for example, have personal property, it's not being used for business, it's being used for your own personal use and pleasure. For example, you buy yourself an iPad. You buy the iPad for $500, and a few months later, for whatever reason, you decide to sell it. So you go ahead, you put your iPad up on eBay or on Kijiji or on one of these electronic sites. And unlike most personal property, which I would point out we usually sell at a loss, right? A car is going to depreciate in value. Most things that you use up for personal use are going to go down in value. But let's assume that your iPad was signed by Steve Jobs. Okay? So people really want your iPad, and someone agrees to pay you $750 for it. Instead of giving you $750, they decide to pay you a Bitcoin. So now, under the rules we've discussed, you have gained $250. But under income tax rules, there is no amount to be included in income. This is personal property. You are deemed to have acquired it for $1,000. You are deemed to have sold it for $1,000, or in both these cases, the greater of your actual proceeds and $1,000. So, taking my example then, you bought it for $500. $1,000 is more than that, so we're going to use $1,000 as our base point. You've sold it for $750. But again, $1,000 is more than that, so we take $1,000 as our base point. We take $1,000 minus $1,000, and as you can see, your gain, your amount to include in income, is nil. So in very general terms, when you have personal property, the Income Tax Act says that you have no loss. You are almost never in a situation where you are allowed to claim a loss for personal property. But the assumption in the Income Tax Act is that normally your gain is also less than $1,000, and therefore you also don't have any tax implications there. So the reason we use may is that every person has to make a decision, a determination as to whether they have a business. If you don't, then you don't have taxable income.
Thank you, Chair.
Thank you, and thank you for the questions. Thank you for the answer. Senator Bellemare, to be followed by Senator Massicotte.
Merci, Monsieur le Président.
Thank you, Chairman. I'd like to thank our witnesses for coming here. My question is rather similar to the point raised by the Chair, that is on the use of the Bitcoin for payment of salary or wages. We know that for the purposes of income, you consider this to be a commodity. But at the same time, Bitcoin is also an element to retain value. It's a capital good to a certain from a certain point of view. And this lines up with what Senator Ringuette put as a question. Let's assume that a person is being paid his salary in Bitcoins. For income tax purposes, it would be necessary to make a conversion at the time of where the salary is paid, not at the end of the year. Use the value of the Bitcoin at that particular date in the area closest to where the person was working, since I suppose the value may vary. As I understand it, and this is what I'm trying to establish, at the end of the year, if the Bitcoin is taken on a great deal of value and it is sold by the recipient, will the person be taxed on the capital gain? If at the end of the year it is exchanged by the individual at a lower rate because the value has dropped, would it be able to be deducted as a loss on employment income? Is there an element of capital that comes into play for the purposes of tax? We know that for tax purposes, only the value is considered at the time when the salary was received. Thank you. It's an excellent question. When the employee receives a Bitcoin, and the value, in fact, does have to be established at the actual time when he was paid. Normally, he received something that would be considered for him a capital good. What is the value then for the employee? It would probably be the amount that is shown as his income for the year. Let's assume then he receives a Bitcoin at a value of, let's take something fairly simple, $1,000. And this would be in April. The person now has a good or property. It was acquired in April, and in December he sees that its value is now 1,200 Canadian dollars. He makes the decision then to sell it. And I think that your question is whether there is a $200 capital gain. Yes, I would say so, probably. For the purposes of income tax, the question would be, what is the cost? And I think it would be considered $1,000. And how much was it sold for? 1,200. So this would be seen as an investment. My colleague, Mr. Cook, is often asked questions of this type. If I receive a good as part of my employment in case of a transaction and I sell it later, how is it to be treated? The only clarification I'd like to make here is that this comes up now and then. When we're talking about a personal property, we are talking about property that can be enjoyed. And this is where bitcoins would be seen somewhat differently, because they in some ways have characteristics of or features of money. At this particular stage, I would say then, in the case that you have given as an example, this would be considered a capital gain of $200, but I'd have to say that the CRA has not yet had to deal with this particular type of question. So you were saying that it might be a gain, but at the same time it might be a loss then. Or it could be treated if the Bitcoin were exchanged, a comparison could be made with someone making use of a salary, let's say 1,000 Canadian dollars, and who decides to convert it to American dollars at the end of the year. This would be considered a gain in relation to the amount received. The value in American dollars of the salary at the time of the transaction as opposed to the value in American dollars where he converts it. There may be a gain or a loss in this particular instance. It could also be a comparison of this type could be made, and I don't think that this would be taxable. Maybe I'm mistaken. I don't think that there's any gain or loss that has to be recorded. If we make a comparison with an international currency transaction, if we make a comparison with a capital gain, then of course it's either a gain or a loss. So the definition of a Bitcoin, if it is defined as simply a means of exchange, or if it is defined as a commodity that may retain value, then I suppose the rules might be different. Thank you. If you have any comments to make on this, I'd be happy to hear them. I have two comments in relation to your comments. The first thing to be noted as I said previously, when you sell personal property, when you have a loss, you are not entitled to deduct this loss from your general income. As you said, your employment income, let's assume that you received a Bitcoin with a value of $1,000 and now it is only worth $500. That means a loss of $500. But if it is a capital loss, as we were supposing, you would not be able to deduct this capital loss from your employment income. And I think that this is what you were attempting to explain or present. Quite clearly, then, there is a difference. But as far as income is concerned, when you receive this Bitcoin, the only thing of interest to us is the fact that you received $1,000. So at that particular stage, you are considered as having $1,000, as far as we are concerned. What you do with your Bitcoin at a later date is your business. There may be certain nuances here. I'm not saying that there are not any. When an employee receives stocks from a company, for example, certain rules apply. In the past, we saw, for example, certain questions relating to Nortel, as well as other companies in Canada, or even in Ottawa, where people did receive stock options or shares instead of salary, and at a later date, these were worth nothing. And of course, this gives rise to serious problems. That is the first point. I think that later on, we will see that transactions with bitcoins as would be considered a capital transaction once the employee received a bitcoin, and would be told that it is not possible to deduct this from your employment income. That's the first point. You also talked about the possibility of taking your bitcoin at a later date and converting it into American dollars. Once again, I think I have to. No, I didn't mean that. What I was saying, that if we made a comparison, we're not even talking about bitcoins. When we take a person who is paid and does engage in currency transactions, it is possible to have a loss or a gain, and I don't think that this results. There's any record necessary for this. I think the nuance, as I understand it, if I may, Mr. Chairman, I think that nuance here is a matter of determining whether this is a personal gain or loss. When we're talking, for example, about money, it is a different situation from a commodity. This is where the problem arises. And it might be that in the future there will be different issues. I might ask perhaps my colleague.
So they have themselves currency, and they buy and sell for an exchange gain. Could they have a gain?
Yes, I think they can.
If you want to.
Yeah.
Donc, ce n'est pas qu'il n'y a jamais.
It's not that there is never a loss or a gain. It depends on whether there is a source of income that is taxable. And even if it is not a business, as I explained, there's a very simple way. There's this amount of $1,000 that makes a difference. If it is a personal property, we must always follow the rules relating to personal property.
All right, and Mr. Erskine, for your answer. Senator Massicotte, please.
Merci, Monsieur le Président. Merci pour être ici.
Thank you, Mr. Chairman. Thank you for coming here, and I'd like to congratulate you, like Senator Blett. The explanations really are extremely clear. Congratulations again. To sum up the answer that we were looking for here, in the Tax Act, personal property is considered as a capital property. I think that in both cases they are taxable for any increase in value. They are taxed differently, of course, and in both particular cases the losses are deductible only in the same way as a gain of this type. Personal loss or personal gain, and a loss in capital tax. Would this summarize the situation in your view? I don't think it's quite that. The problem is that personal gains are capital gains. And when we talk about the Income Tax Act, we are talking about two types of income. That is the income from capital and income, business income. When you have a personal gain, generally it is a capital gain. And if I may then, in this particular instance, there is some property. The first question before we start talking about capital or not, the first question is always, is this a personal property or is it a property being used in your business? So this is where we always start off. If it relates to your business, let's say it isn't. Let's say it's personal. Yes, if it's personal, then the gains from personal property, a gain would be almost always considered a capital gain. I thought it was possible to have a property, let's say a car. I buy a car, the car increases in value. I don't have any interest or profit. Well, that's, if I sell it a week afterwards, I thought this would be a personal gain, but not a capital gain. It would tax at 100% as a 50%. No, it would be a capital gain, 50%. That's the difference. And if, as I said previously, this is only if, this is relating to this matter of $1,000. The Bitcoin can be considered a currency like the American dollar, as well as gold or chicken. There may be an increase in value for the business. It would be considered taxable if it were a profit. It would be taxed as a capital gain rather than income.
Or chickens, and you hold it for a year, and you're not. It's not a business. You're not transacting this stuff every second day, and therefore you're not. The arguments for business is not there, but you hold it for a long time, and you make, use a good example. I'm sure you may know of it. Our chairman had bought some bitcoins. It's worth $20 more, and he sells it. And so eventually there's a gain. I think my understanding of the Income Tax Act is that it's going to be a taxable gain by somebody. Now, if you transact the business significantly, it's income, it's a business income, tax 100%. If you hold it for a long time, it becomes a capital property, tax at 50%. Is that a good summary?
That's a good question and a pretty good summary. Basically what you're talking about is the difference between sort of an income property versus an investment type property. So when you're holding something such as a Bitcoin for investment purposes rather than for the purpose of a business.
Or if you just hold it, you forgot it in your wallet. There's no intent here. There's no plan. It's like holding U.S. currency, if you wish. And you hold it in your wallet, and you got it a year later, and it's worth more. I think it's taxable, and minus that.
I would think you're correct on that.
Okay, thank you.
Because okay. Yeah.
That's good enough. Yeah. Let me go. What I want to come back to is I think there's a difference. The chairman seems to have imputed his reading of your treatment was quite similar to the American treatment. And he was suggesting with a small variation of employment income, your position was quite the same. My understanding was different. I understood the American made it very clear they're treating this as a property right off the start. And you're treating it like a currency. Is that the case?
We are not treating it as a currency.
Or as a commodity,
Yes. However, to put a gloss on that, we are using it in this sense. We are using the term commodity and property in this to mean the same thing. We are treating it as a thing and not as a currency. We are treating it as a good and not as money.
So therefore, the onus on the holder of that right, with rare exception, unless he transacts it for personal in and out. I mean, he has to ask himself the question: if I hold it, or if I need to be holding it and make a profit, there's a lot of accounting involved here. I got to prove what price I paid for it. I got to prove what price I sold it for. I got to pay GST if it's deemed to be taxable, service or goods. I mean, that's heavy, and that was your intent.
I think I can clarify this. I think that's a reasonable summary. I don't think I can speak to intent. I will defer to my colleagues at the Department of Finance for drafting the Income Tax Act. That said, the accounting for purposes of a good that you are holding for investment purposes, or as you say, that you have forgotten in your back pocket and you decide later on you're going to sell. So no intention to generate profit, no intention to generate business income. So we'll take it as read. Here's your basic investment. This is just property you've got. The only clear accounting you have to do for that is know how much you paid for it. And in the example that was given as someone who received it in the form of salary, how much was included in your income for it is probably a reasonable proxy for what the value was. How much did you get it for? How much did you sell it for? Assuming that you're correct, it's just an investment, then you've got your capital gain, and half of that would be included in your income.
That's a lot of accounting.
But it's 2 points of data.
Yes, I appreciate it. Let me jump, if I could. Now, having said all that, we know what the intent is. We know that it's a taxable transaction. But as you know, the dynamics of this form of currency is that it's confidential. And that I suspect, as reported by many governments, including the state of Florida more recently, and the American country, they're basically saying some people are motivated to use this currency to make sure people like you never hear about it. And people like you never tax it, and that's their motivation. It remains anonymous, and they can do this without government supervision. How do you deal with that? How do you? We know the theory, but how do you apply it? Are you okay?
We're now wandering to the realm of compliance and, in a sense, away from the theory. So, as you've said, we are now looking at what do we do with it. Certainly my colleagues in the compliance area have some interest in how is Bitcoin being used. Can we trace it? Can we track it? Are we concerned about, for example, money laundering? Are we concerned about being able to hide income, right, from an income tax point of view? As I believe that you've heard throughout the testimony, it is not perhaps as untraceable as it appears. Cash transactions probably give us, at this time, the most difficulty, because unless there is some register, unless there is some way to trace it, we don't know it happened. So when you talk about digital currency as being untraceable, it's not clear at this time how untraceable it is. I can tell you that on the audit side, there have been a very small, at this point, trickle of files where people are saying, you know, I never realized I had to keep track of Bitcoins. You know, I did stuff in Bitcoins. It never occurred to me I had to do something with it. Do I? And that's the side of most taxpayers who do want to comply. And, you know, we've gone back to them and said, yes, you do, and here's our voluntary disclosure procedure, and we'd be happy to hear from you. But on the side of the people who aren't complying, who are trying to hide it, that is where our compliance side is looking at how do we track, how do we trace. I think it's still very much up in the air as to how big the problem really is. Because as has been mentioned, there are ways of tracking, there are ways of tracing.
Okay, thank you, Chair.
Senator Tkachuk, I believe you had a question.
Just to clarify, I don't know if it can be clarified, but just what Senator Mascott was talking about is that if a Bitcoin can be treated by a consumer who isn't in the business of Bitcoins, but it is like an antique table. So if I have an antique table, it's something that I possess. I may sell it at some time, even at an increased value. It just disappears. That money disappears into the ether. It's my money. There's no taxable gain there. If I have a cottage, which is my second home, and I sell it for a profit, I have a capital gain. But if I have a Bitcoin, I have to go through all that stuff that Senator Mescott was complaining about if I'm in the business of selling something, whether I'm a dentist or whatever. If I take a Bitcoin, I have to value it in Canadian dollars, and then I have to deal with it in a taxable way. But if I just have it, and I sell my antique table for that with that Bitcoin, and then it raises in value by 50%, and I go and buy a boat, there's no tax consequences, is there? It just disappears. Well, I'm just asking. Is there a tax consequence? Would it be any different than I took that antique table and traded it for the boat? What's the difference?
How real is that?
If you're treating it as a thing, which is what you are, you're treating it as a thing. You're not treating it as an investment. You're treating it as just something that I buy for my house.
How much money was involved there?
So I'm just asking. I think that I'm correct about that, but there's no tax consequences to something like that.
That's a question.
I think so.
That really is a question.
Well, what I'm trying to get at is your particular situation where you went and bought a Bitcoin. You take that Bitcoin, because it increased in value, you go buy 3 packs of smokes, right, with that Bitcoin. It disappears, right? Like, there's no capital gain there. There's no nothing. You're not in the business of
Well,
investment.
you've asked the question. We are going to get
We'll
the
get
answer.
the answer.
So we'll try to clarify this point. When you buy and then sell personal property, there can be a capital gain. There would be a capital gain. Therefore, in your case with your antique table, and there are some very limited specialized rules that I'm not going to go into, but
Yep.
to answer your question generally, yes, you have a capital gain. However, because in tax policy terms we don't want to tax garage sales, we have it's the de minimis rule, it's the $1,000 rule I keep talking about. But if your antique table sold and you made more than $1,000 gain, then the difference between the amount you sold it for, say $1,500, and $1,000 would be your capital gain. You would have a $500 capital gain.
And if I sold it for less, would I have a capital loss? I'm just asking.
Yep.
Yes.
If I may.
Yes, please.
In most cases, the Income Tax Act does not permit losses for personal property.
But it permits gain.
Yes.
But that goes against your theory of capital loss and capital gain, because if you have a capital loss, I should be able to use it against the stock that I sold,
Right.
where I gained $1,000.
Right, and I did, in that sense, misspeak. You have your capital loss, and you can use it against your capital gains.
Ah,
But
What was involved there? Tell us the truth.
it was just a $1,000 table.
Thank you, Senator Tkachuk. That completes round one, but we do have questions for round two, starting with Senator Ringett and Senator Belmar-Defano. No? All right, Senator Ringett.
I really appreciate and from your answers, you've given great consideration to all this Bitcoin issue and the effect that it has and could have on your agency and how you deal with it. My question now is, what event would be necessary for Canada Revenue Agency to change its treatment of Bitcoin from commodity to currency?
thank you for that question. At the present time, we are still studying the nature of Bitcoin, much like our colleagues across the government. And this is certainly a study that is best left to, for example, our colleagues at the Bank of Canada, our colleagues at the Department of Finance. We are effectively experts in the Income Tax Act, CPP and EI, goods and services tax. So I think the most straightforward answer to that question is probably when it gets there, when our colleagues who actually have the information and the knowledge to resolve that question come back to us and say, okay, this is now a currency. So in very general terms, I've had the great pleasure of reading the proceedings actually from this committee on Bitcoins. And as I said at the beginning of my remarks, it appears that the general consensus is we're not there yet. At the present time, I don't have the impression that the CRA is going to be the department that makes the decision that we are there yet.
So you would rely on a decision based on facts from the Bank of Canada and the Department of Finance in order to change your treatment. So basically you're also saying that the Bank of Canada now and the Department of Finance are treating it as a commodity too.
I can only speak from what I have read in the proceedings and in the discussions we have had with our colleagues. As I said, this is an impression. My impression is that the general consensus is that this is still not a currency.
Thank you, Chair.
Senator Massicotte.
On that issue, though, I'm trying to understand what the relevancy is of that question. Whether it's a currency, or a box of chickens, or it's the same thing. I mean, when you own currency, if you make it's the same treatment of a gain. So, from an income tax point of view, what's the relevancy of that question?
Thank you. That is actually a very, very good question. It has, from an income tax point of view, limited relevancy for that reason. That being said, there are valuation issues attached to it. So from the perspective of the Income Tax Act, the book, it probably doesn't matter very much. From the perspective of how much is it, how do you determine the amounts, it can matter. It can matter.
But that remains irrespective.
But it is a valuation issue. The one gloss I would add on that, though, is that there are rules in the Income Tax Act about foreign exchange gains and losses. So if we get to the point of considering this a currency, like a fiat currency, there may be other rules that apply. The other thing I would add is that from the goods and services tax point of view, which is distinct, completely different legislation from the Income Tax Act, they are currently looking at whether or not digital currency is money, because that is a defined term for GST purposes, and the GST treatment may end up varying depending on whether or not it is currency. Because a goods and services tax, which is a sales tax or a services tax, may, when you are transacting cash, exchanging cash for cash, it has different goods and services tax implications.
If I could, I just want to allow you a chance to maybe clarify or correct. Start off by read evaluation. You said earlier that the value of the receipt of a Bitcoin, say for employment purposes, is what the employer and the employee agreed to. I suspect what you may want to say that there's an immense caveat to that, assuming that value is reasonable, because otherwise those two parties could agree and basically avoid income tax by misevaluating. So it's an evidence issue, I think, I presume. That's the bottom line always at the time.
That's exactly correct.
Okay, thank you. Thank you, Chair.
Thank you, Senator Massicotte. Senator Bellemare.
Thank you, Monsieur le Président. C'est par rapport à...
It's in relation to this type of treatment of the Bitcoin, and for the people who are listening to us, as I understand it, under the present way of considering the Bitcoin as a property or a good, an individual transacting with bitcoins, who receives bitcoins, and decides to exchange them later on, considers it to be an object of value and sells it. If he sells it at a profit, if the gain is under $1,000, there is no requirement to declare it an income tax. Is that so? But if there are businesses involved in transactions, then the situation is quite different. And if I were to push this even farther, if the Bitcoin were to be used more extensively by individuals, then they would have to be careful. That is, pay attention to whatever gains they might realize in exchanging their Bitcoins later on, and would have to declare them. This means that you at CRA would have to monitor the situation, that have to follow more closely what is happening with the Bitcoins. Is that correct? The only nuance I think that I would make here is that you talked about someone who is spending a lot of time following what is happening to the Bitcoin. You said someone who buys it for personal use and is not a business. The problem here is that there is a definition in the Income Tax Act, a definition of what is considered to be a business, and this is very wide.
For this committee is that the definition of business for purposes of the Income Tax Act is very broad. It includes an adventure in the nature of a trade. It includes an undertaking of any kind whatsoever. Therefore,
So you don't have to be registered.
right, and that is actually something that can trip people up. So in my opening remarks,
Okay.
I noted that you have to make a determination as to whether you are holding it just as an investment, simply as an investment, or whether there is more going on that will bring it into that business realm. And this is where it does start to get a bit technical. The concept of business is very broad for the Income Tax Act. We look at, and there are, the Canada Revenue Agency does have guides on when we consider something a business or not, and that is in fact listed in the fact sheet that has been provided to the clerk on our position on Bitcoins, is when do you cross the line from I've decided to hold a Bitcoin as an investment, as a one-off or a very basic sort of personal matter. When have I devoted the time, the resources, the knowledge, the energy into trading in Bitcoins? Because you can cross that line, at which point it will no longer be a capital gain, it will be fully includable in income as something that you are running as a business in the very broad sense in the Income Tax Act.
It's like a stock trader.
Correct.
Talking about Senator Kachik's coffee table.
Antique.
Sorry, antique.
$1,000
Yeah, the $1,000
Bought for a buck.
the $1,000 you referred to, that's an annual deduction, not a per transaction deduction. Is that correct?
No, that would be a per transaction deduction.
So he can sell that coffee. He has 10 coffee tables. I want to let you know. So he sold all 10 coffee tables for $1,000 profit. He's not taxed on all 10? No, it's in your garage.
Then she could get me cash. No. Income tax.
So I'd be happy to clarify that. You would, when I said it was on a transaction basis, you're quite correct. It would be if the senator had 10 coffee tables.
Which he does.
For a capital gains perspective, we would be looking at each item. It gets obviously a little more complicated when you're talking about something like Bitcoins, because, are you going to, how does the $1,000 limit apply there? But again, we do look at this when people buy and sell currency for personal use, and it is considered a collective. In other words, I might say that 25 cents is a quarter, it's one thing, but I suspect, and again, we have not studied this this question has not been reviewed by us in great depth, but you are talking about something collective in the way that money is collective. And this is where that line between a commodity and a currency becomes more challenging for digital currency than for, a regular commodity.
Thank you, Chair.
Thank you. Mr. Erskine, you have anticipated a number of the excellent questions that have been asked by the members of the committee. Is there any question that you would like to pose to yourself that you would like to be able to express to the committee that we didn't ask?
No, we know the answer to it.
No, very seriously, is there any other points that you would like to be able to make that perhaps we did not raise the question?
Thank you, Mr. Chair. One of the questions that is exercising our mind right now that we don't have the answer to, and we are hoping perhaps to get input on, or perhaps come back later on and be able to speak on, is the question of Bitcoin mining. So people mine Bitcoins. And like many people here, based on what I've seen, we have to understand what that means. Is it the same as mining gold? So I will tell you what we have said in very general terms, which is that at the moment we are looking at it as an inventory. So if you are someone who actually mines Bitcoins as a business, as something you do to generate income, we will say that you have inventory. And we have heard previously that you get new Bitcoins. We're still at the stage where people are getting new Bitcoins or are mining something. So that is the question that is still exercising my mind, and that we have hopes will be resolved. We have had to give an answer to this because part of our job, part of the reason that the CRA had to get there sooner than most people, and in fact, for once, sooner than our IRS colleagues, is, the media asked, what do you think? We had to have an answer. Taxpayers have asked us, I have to file my return. What do you think? So we have taken the view that it's inventory, which means that you don't have to immediately say, well, I mined the Bitcoin and today it's worth $1,000. I have $1,000 of income. We haven't taken that perspective. We have taken the perspective that, you now have inventory. And until you do something with your inventory, there isn't an immediate tax implication right there on that day. Where we go forward with this, I think, is going to be informed as our understanding of how Bitcoins are created evolves.
Senator Bellemare.
Petite question là-dessus.
A question on this point. We know that there are miners, there are people who are being paid in Bitcoins, fact of decrypting them. There are costs involved, energy costs, and so forth. And I imagine that someone who is involved in this kind of activity would probably have to make a report on income and costs, and it's on the difference that they would be taxed. Is that so? Certainly. And this is a type of issue that you are dealing with at the present time, you are considering at the present time. There may be minors. My question is rather theoretical. But can you tell me that when we look at, we know that the more Bitcoins you have, with the mathematical calculation, the more it costs in energy. Has it been observed that the difference between the income and the costs has remained fairly stable per Bitcoin? I don't think that we've been able to see enough files to be able to answer that question, unfortunately. We haven't got that far yet. I know that it's theoretical. Thank you.
The members of the Banking Committee are extremely experienced in asking questions, and I can assure you that each one of them knows when they get a mushy or waffly answer in response. I can assure you that did not take place today. And I know I speak for everyone on the committee. Our great appreciation for your being here. Your answers to our questions were crisp, clear, and we greatly appreciate it. This is very, very helpful in our continuing study, and we would welcome, as you know, the study is going to continue for basically another year, and I'm sure there'll be some changes over that year in our understanding of Bitcoin and yours as well. And we would welcome you back at some future time.
Thank you,
Thank you
Mr.
very, very much for being before us.
Thank you.
This meeting is concluded.